What's up, everybody? I'm Mark Monroe. I'm the co-host, co-producer, co-creator of the Come Up series. And this is about to be unscripted because we're Unbroken Mindsets. And I'm live here on the set with the squad. So stay tuned. There's no question that's off the table. So let's get to it.
On the Come Up series.
Wait, you didn't do it like the other way.
You gotta do it like the other one.
Are you guys ready? Because this is the Come Up.
In 60 seconds or less.
60 seconds or less.
Oh, people have been asking me to bring those back. Like, people don't realize I did all those in one take.
I was gonna ask you why you didn't. Like, what happened? You stopped.
I ain't gonna lie, them things help.
Like, them things.
You know, I didn't know if everybody was like, you know, a lot of times when I'm putting out videos, I'm like kind of like running A/B tests to see like, hey, do they like it? Do they not? I mean, you know, people were like, you know, I sat here for like 60 seconds just for this. Like,
nah, like especially when you did the jerk sounding that you did.
Oh, the breakdown.
Yeah, you
man,
talking
the
about
breakdown.
ETFs.
Oh my goodness. Now that one was, and I'm
the breakdown is coming back for a season 2. That's definitely, and so we did enough episodes to see that people definitely wanted me to go in depth on things, and now I'm going to start going even further, not just on market stuff, but also on startups. Even some crypto things. So
I like that.
All right. Okay. All right.
So Mark, this sparked the idea of you creating the Come Up series.
So I was forced. I mean, I was motivated. So it started off by me being able to have the privilege of mentoring Jolene, and she did a pretty much a posting after we went through a year of just like, you know, just investing and trading. And then she posted about like getting up to, I think it was like 962% return. And this is before COVID. This is way before COVID.
Right.
So then she was like, and you know, back in those days, it was like, we didn't do 2-year leaps. We were actually doing 1-year leaps with Jolene. And so 1 year and 6 months. So interesting fact that next thing you know, it's like she posts that. And I'm just sitting in meetings and I'm like, whoa, why is my phone going off like this? Like, why am I getting all these messages? And then it's like, can you teach me? Can you mentor me? Can you do this? And I'm like, wait, what? Because for a long period of time, I was like, I just did it in quiet and secret. I just like, okay, hey, if the person wanted me to teach them, I would do it. But, you know, honestly, it's like, I didn't really highly publicize what I did. But now that Jolene had made this posting, I was like, oh, well, cat's out of the bag. There it is. And so then I'm sitting at the Tesla supercharging station and she's calling me and she's like, hey, sorry to blow you up. And so we're both kind of like just sitting back and talking about like, what is it that the culture needs, you know, and why is this like really, really important? And then there was just like this long, eerie pause. And I'm like thinking that like her phone call dropped. And I was like, hello? And she was like, yeah. I was like, oh, okay, we're doing this. And she was like, yeah, I think we're doing this. And I was like, all right, well, what are we going to call it? And so then we had to come up with like ideas and, you know, pretty much we were like, well, I mean, this is going to be a huge come up for folks and the fact that all the knowledge and information that they're going to gain. So it's like, you know, why don't we just call it the come up? It was originally just going to be the come up. And then we found out that there was this other wonderful sister who had the come up on her YouTube channel. So we're like, okay, that's not going to fly. So we literally just said, all right, well, you know, we're going to be doing a series of content anyways, where it's not going to just be all static, the same thing. So then that's when we said, okay, hey, it's going to be the Come Up series, because ultimately the plan was, you know, I helped get everything started alongside with Jolene. And then ultimately we start introducing other great thought leaders to expand the brand of the Come Up series. So that's always been the objective. And so there you have it, the Come Up series.
So I guess I gotta ask, where did the name Cousins come from? Right. How did y'all come up with that?
Actually, we didn't create that. The people.
The family did. Okay. All right.
No. I think every now and then we said, "What's up, family?" And stuff like that. But I think that ultimately they came up with like the fact that like how y'all know how we do. Like,
Everybody
that's my cousin.
And just in case y'all don't know, man, Mark is a graduate of Tuskegee University. He is from a HBCU. So I already know, man. We had the barbecue. Cuz, what's good?
You already know.
Yeah. So I definitely.
You better not bring no potato salad with no shrimp in it.
So I gotta ask this.
Yeah.
I noticed that you love trading ETFs. I'm not gonna say that's your favorite thing to trade, but you love trading ETFs.
Yes.
Why is that? Why do you choose ETFs over stocks, regular stocks?
When you trade an ETF, I mean, like you have to think about the psychology breakdown of an ETF, right? When let's say if you invest in an ETF, like just buy the ETF itself, how high is your risk as it pertains to losing money in the ETF?
Not that high like a regular stock, because you got chances. It's other companies within it.
Yeah, so it definitely makes sense, because if you look at one Tesla contract compared to ARK contract, then it's say.
And it's like the degree of error also significantly comes down when you're investing or trading an ETF versus, say, for example, because ETFs, I mean, you're not going to be in very much in business very long if your ETF just doesn't perform and it's consistently compared against the benchmark S&P 500. Gotcha. So that's one of the reasons why I like ETFs so much, because of the fact that it's never really a guaranteed win, but your chances, like you've significantly increased your chances and you decreased your margin of error within an ETF significantly. Now, do things happen? Yes. Speaking of ARK, I mean, in order for ARK to have to drop, then everything in that ETF literally had to just become decimated. And that's what we saw. But when we look at, say, for example, your XLK, your SMH, your XLYs, your FTNs.
SMH. I love SMH. I love that.
I mean, it's kind of hard because especially when you have that many companies that sit within an ETF, you become quite buffered, when it comes to potential loss or potential blowbacks. And that's one of the beautiful reasons why I love ETFs, but that's not my favorite thing to trade.
What's your favorite thing to trade?
Thank you, Moody.
Hey, look, I gave y'all.
You gotta know. You said no question. No question. Go. Hey, we gotta ask.
And I know how you get when you sip that water.
So I love to try. For me, I will forever love innovative stocks. I love innovation. For me, like it's very obvious. I mean, coming from venture capital and angel investing, you have to love innovation, disruptive companies in order to be really in that space. If you're not into that kind of thing, then why are you here? So that's kind of like where my love has always stayed with. I always go with the companies that are innovating and like really disrupting complete sectors or industries, and really rewriting the fabric of what an industry or a sector should be. So looking at companies like, of course, I mean, Tesla would probably be my favorite stock in the entire market right now. Then, of course, I like AMD because of the fact that it's disruptive and at the same token, it's still considered an underdog. I'm a huge fan of other companies like, one of the biggest gems that I gave out this year, FT&T Fortinet. That was huge. You know what? Let me go to my watch list.
Because I want the GOAT himself to walk me through the day.
How about this? I'll do something a little bit unprecedented. I'll tell you why it's in my watch list. How about that?
Let me put on my baby. Let me put on my baby bib because I'm ready to get spoon fed. Right now.
Oh Lord, here we go. See? I see where tonight's going. So I mean, in my list, I've already mentioned I have Tesla. I mean, you guys already know the vibes there. Amazon, I will forever be a fan of Amazon, even when I can see it now and it's consistently undervalued. I think the actual fair value price places it at about $4,600, $4,700 a share. Chipotle Mexican Grill. I'm a huge fan of that because of the fact that they've literally disrupted the entire fast food industry, and they keep doing that, especially since they get to source from local service suppliers. Netflix, because of the fact that they disrupted television and what we know of entertainment. I'm a huge fan, like I said, AMD. WWE is kind of like on the teetering side because, especially since I've been watching AEW, if AEW goes public, then WWE is completely scratched off the list. Google, because of the fact of not only just what they do in the search and ads, but also in the sense of they have a whole plethora of over 200 companies within their portfolio that they can easily turn the lights on to as it pertains to turning those into services if they just get it right. And I think they do that slowly because they're kind of like a research/tech company. Mm-hmm. Anything that's chip related, I'm going to be a huge fan of, except for Intel. Let's see.
Whoa. Well, I guess because you like AMD.
So nah.
I mean, yeah, it's like if I like AMD and Nvidia, it's like why would I like Intel?
I remember when I watched one of his series and he said Intel said they're not going to get right until sips his water 2023.
Okay.
Yes. So I understand you on that. I stopped trading the Intel after they did the CEO switch.
Oh, was it CEO or I think it was maybe the CEO?
No, it was the CEO. They definitely made the right decision, but was it the right decision? I mean, a company that I haven't really talked about a lot, but it's something that everybody should put on their radar is MKL, Merkle Insurance, which is pretty much if you notice, since Tesla's getting a lot of insurance in like different states, one of the backers and underwriters to that is MKL.
Now, if you don't mind me cutting you off for a second.
Did we lose
when
him?
You're investing in these, because like day trades or week trades, you're kind of holding these for how long are you getting these contracts out? And then also too, like what is it that you're using to research inside of these, because you can't just be using FinViz bar charts.
I know bar charts is one of his favorites.
And I've seen you pull up a company merger, and I was like, how did he find that out? Like, how did he get that so quick? It was like, hey, did y'all take advantage of this right here? And I'm still trying to figure out like how did it happen? And you already had the information. You know what I mean?
Just imagine how people around me on a day-to-day basis, and I sometimes say it like, make sure you guys pay attention to this, make sure you guys pay attention to that, and then next thing you know, a few days later, they're like,
yeah. So
it's more so in the sense that that's why it's like I believe that like coming from the startup world and knowing like how things like tend to go through cycles of innovation, and then also when does everybody else get excited for it and how that works, and it's more amplified in the publicly traded markets. I look at it like this. In the private market, everybody gets excited when a company comes out and launches, and of course they just got funded and everybody wants to know everything that they can about the company. And then you wait a few more months or a year to find out, okay, hey, well, what's the secret sauce? Right. In a publicly traded market, given in the sense that they've been around for a minute, those cycles come a lot faster. And so when you start to know the lifeblood of a company, and when you start to understand exactly how they're structured, and then also kind of like how their PR and marketing cycles are, then it's like it starts to become like a no-brainer. And then when you start like putting into your mind like potential acquisitions or mergers, you really just look at it in the sense of, okay, for the next phase, for them to go to the next level, what is it going to take for them to get there? And who are they going to have to run through in order to get it? Or essentially, who are they going to have to acquire in order to get to that next level? Mm. And when you get to the publicly traded markets, it's more like a winner take all. That's literally how, really the successful become even more successful in the publicly traded market. So it's no longer kumbaya, let's hold hands and like partner up together and see, how much we can collaborate. No, it's more so in the sense of we're here to take up more and more market share because that's what our shareholders want in order for us to produce value.
Fair.
Okay, gotcha.
Okay, gotcha.
I got a similar question to like what Mo was saying. So do you play weekly contracts? And when you are going into options and getting some contracts, if you can tell, like, how far out do you go and why is that reason? I understand the Greeks and the stats and the open interest and the volume, the volatility, but coming from you, Mark Monroe, why do you, even if you're day trading, do you do weekly contracts, and how far out do you go when you expect even a $5 or a $10 move?
I mean, it depends. I mean, I'm not really that much of a weekly trader anymore. I mean, if I do spot an opportunity and if I have the time, then I'll take it. But for the most part, it's like normally I'm playing things out for a quarter, and what is it that I expect to hear during that quarter? Or really, like, sweet spot is between 6 months to a year and a half. That's really where you'll probably start to find me in those waters more so. But don't get it twisted. It's like, if I'm a whale, so if I spot like there's food to be eaten,
go ahead, throw it up.
I mean, you may possibly feel my presence in the options chain.
Yeah, go ahead.
But for the most part, it's like I look at it from the standpoint of, like, really, what is my expectations from this company over this period of time? Like, normally when I'm making an investment into something, I'm walking in with some form of expectation of what is it that I either expect to hear, what is it that I expect to hear to be released, what is it that is expected to be, honestly, how the company is expected to perform. Are we in a growth cycle for this company, or are we in like a downward cycle for the company where it's like, okay, hey, we go back into rapid investment where they're going to be doing more spending. If they're going to be doing more spending, investors don't like to hear that up front. But when they start to see like those catalysts start to play out, then it's like, okay, I'm rocking with that. I guess the best example to give is, I don't know if you guys remember, I think it happened early last year, where Amazon said that it was going to start reinvesting into its one-day shipping delivery. And on the day that it mentioned that, the stock tanked, because investors know, okay, you're going to be spending an exorbitant, you're going to your CapEx spending is about to go pretty high. But at the same token, now we're starting to hear about Amazon literally starting to ship other things outside of what it sells on Amazon.com for one-day shipping, whether it's logistics. And they now have a significant presence at Kentucky, which, for anybody that knows, when it comes to shipping, that's a major hub when it comes to shipping and logistics. So now Amazon is there. So that money that they spent in CapEx spending and making that investment a year ago is now starting to pay off.
You're already getting the money back from it.
Mm-hmm.
Then if you added to that the Tijuana, the factory they just landed in Tijuana. So yeah, okay, I got you.
It makes sense. So for someone that doesn't know how to play options, so like let's say they hear the news about Apple with Apple coming out with AR, the new phone, the new watches, and that it's right around the corner that they're going to have this event. I believe that the stock will go down during the event or after the event. But like, to play the anticipation run up, would you just go a couple of weeks out, or like basically that week of it happening?
So yeah, it's like normally like on the day of, it's really a day trader's paradise. But really, if you actually know the historical piece behind Apple's events, so you'll have like a slight run up, which depending on when in the year, because they have multiple product releases, but really the September one is their major one, because that's really their highest profit margin item. It's kind of like their cornerstone of the company. But when you think about it, it's like, for me, here's how, like, for me, I would play Apple. For me, I would play Apple in the sense that, okay, hey, I would come in before it does its announcement, but with the mindset of not really playing it for the weekly, but maybe for a few months out, because I want to definitely take advantage of maybe even some of those holiday sales. So I would probably at least play, say, for example, in December or January, so which gives me a 4-month span. And then I know that Apple is going to drop after the product announcement is released, unless they say, one more thing. But if they don't, then essentially I can use whatever capital that I already had allocated to it, but I didn't put it in the beginning. I can use that as a dollar cost average strategy. So that way it's like I already knew that, and then essentially just play it out to January or December for the holiday sales, and then ultimately win.
So now, being that you play contracts more further out, and it is a lot more pricier, right?
How do you go? Yeah, you can ask about the strike price.
So yeah,
how do you determine your strike price?
and then also too, what would be your advice for somebody who's in with a small account?
Okay, that's a lot to unpack.
Maybe $200 to $500 when you know that those. Or what would you give somebody who's just getting into the game, being that you do play further out contracts? How would you go about at least giving them the right path to get on in order to build their account or portfolio?
Okay, so here's how I do it. Like, first things first, you got to know who you are as a trader. Are you a scalper? Are you a swing trader? Or are you a long-term trader? Me personally, I didn't start off as a long-term trader. I didn't really start off as a swing trader. I started off as a scalping trader. When I realized that, hey, that I can do other things and I needed more time just for the sake of my own sanity, I became more of a swing trader. And then ultimately, gradually, I became a long-term trader. I strongly urge anybody to do that so that way they can actually, it's like, even though you want to get your feet wet, it allows you to have the time while you're in the trade to learn the process while you're going through it, where you can start learning the mechanics. How is it that I pick typically a strike? If you look at the strike price formula that I came up with, there's really no secret behind it. If you really look at the average return that a stock normally gives you, and if you erase 2020 off of the table, then normally your stock averages about kind of close to the same performance of the S&P 500 on a year-over-year basis, which is about 15 to 20% year-over-year. So if you're playing in, say, for example, a two-year contract, you're going to probably play it for a year and a half and probably put it at, say, for example, if your focus was 20%, but you're giving yourself a year and a half, you'll probably give yourself 25%. So you'll put the 25% bump from where the strike price is, or from the current price, and then say, okay, hey, this is where price target is. If you really go back and look at any analyst research, they give you pretty much a six month to a year long target. And they pretty much played by the same rules based upon essentially what they expect, but except that they're looking at it purely from a PE ratio, because most of your analysts are looking at it from a value-based research. They don't really think about it from growth. So if you really kind of like put it towards that, that's really how the strike price was really comprised of, but it gives you kind of like a cheat code. So that way you don't have to sit there and break it down every time to say, okay, hey, well, this is ultimately how, like, this is what I expect the price to be, or this is what the average price would be like. And honestly, another thing that you do, I think I recently did this on another episode, where the stock market gives you gifts, where a stock goes into correction. You can literally just play the stocks, especially if you're doing a year-long leap or even a 2-year leap. You can literally just play it to either especially you can play it to the 50-day, you can play it to the 50-day moving average, or you can play it to the 20-day moving average as it pertains to the stock before it corrected, and then essentially set your benchmarks there. Because 9 times out of 10, if a stock corrects, 9 times out of 10, it's going to come back up to where its price was at the 50-day or the 21-day EMA.
And someone said the same thing I was about to say in the chat. Take notes. Like, these are gems. This is free game. Take notes. I have somebody asked a question in here about how do you feel about Taiwan Semiconductor?
Oh, I love Taiwan Semiconductor. I think that honestly, it's like, I don't know if Intel will be, I think Intel made one of the biggest mistakes, which was being completely arrogant in the process. Because for those that think about Intel, they don't have to go through Taiwan Semiconductor. They literally have their own foundry, which can compete against Taiwanese Semiconductor, as well as, Samsung, which is now partnered with AMD. So if you really think about it, it's like Taiwanese Semiconductor, like, think about the type of players in which that it has attracted, because of the fact that it took some of the same pages as some of the other software companies. Hey, we understand that we already have clients here, but we're going to keep pushing the envelope even further. We know it's going to have a significant cost up front, but what we gain on the backside of things later on down the road is tenfold what we spend up front. So that's one of the reasons why I'm a huge fanboy of Taiwanese Semiconductor and what they do and what they can produce. And honestly, it's like, now they're in a place where it's like, okay, hey, they're in first place, probably Samsung is in second, and everybody else is paying rent.
Mm-hmm.
Gotcha. Yeah.
Definitely the largest chip producer in the world. So gotta give them their props for that.
So What are some of your favorite sites that you use when you're doing your research?
So there's really not a lot of secrets behind it. You know, you guys mentioned bar chart. Bar chart is good for looking at it from some of the technical analysis indicators. I love using my brokerage platform because they actually give you some pretty solid stuff. Like, for example, you get Morgan Stanley if you're with E-Trade. Just think about it. Morgan Stanley produces some of the dopest research that you literally have at your fingertips that you don't have to pay for. It's like right there at your disposal. I'm probably sure that Thinkorswim has the same thing. Most brokerages have good analyst research. Another thing that you can use is tip ranks. I also like using, you know, sometimes reading Seeking Alpha. I'm a huge, I keep coming back to E-Trade because E-Trade Pro gives me a lot of the stuff that I need. So if you use E-Trade Pro, there's a section on E-Trade Pro's platform where you can actually have news and you just type in the ticker and it gives you all the news that's coming forth. And then essentially you just have to go through the process of filtering through the noise. Shout out to Tom Lee and FS Insight. Fundstrat, where they provide significant research that's pretty dope. You also have ARC, which also gives you wonderful research, especially for free. And they also throw in Fundstrat, yep.
Fundstrat. Is that
and then ARC also does stuff where they also put their models, their algorithmic models on GitHub, where you can actually run it as a test and like literally throw in some of your own data points and then see exactly how you fare. Anything Tesla, I watch Rob Maurer with Tesla Daily. Let's see, you know, Apple News becomes your best friend if you don't want to use all those resources because it really like comprises all those in. I don't really read Wall Street Journal. I'm not really a huge fan of Bloomberg because of the fact that a lot of those are like, you know, money grabs for, you know, ad dollars as well as subscription. Let's see here. I mean, there's so many things that I use.
Do you use the Trader's Almanac?
You know, Trader's Almanac can be hit or miss, man. Like for real, for real. I mean, it's a good data point, but it's not something that you can actually say, okay, hey, I'm going to take it to the bank and utilize. It's good there for historical data. I mean, like all almanacs. But like, for example, does an almanac work with, like, say, for example, where we're at in climate change right now? Probably not. So, I mean, it's like I take it with a huge grain of salt. I wish that they would actually provide a digital version instead of like making you like literally utilize the book. But you know,
sorry to stop your thought. Did you what was his name again? Rob
Maurer. I think we had him on the show where he literally does everything Tesla and electric vehicles every day on his YouTube channel. Another thing that I like to do every now and then just for kicks, I like to check out stock twits just to see exactly what other traders are talking about. Some some, you know, just to see who's bearish, who's bullish. And then on top of that, it's like, you know, also go to the source themselves, go to the company. You know, I've given out well wisdom as well, so that way you can see what other like hedge funds are doing. That's also free. So you could kind of like do it if you want to pay for it. It allows you to back test against it. But yeah, I mean, you get to see exactly like where were funds investing, what did they invest in specifically, what did they sell? It kind of gives you an idea, especially when you look at it from a seasonality basis. And then again, go look at the investor relations on the company's website. A lot of folks don't really give that justice the way that it should be, because if anything, who better than to tell you than the company?
Yeah, that's true.
You're right.
So how do you feel about shorted stocks, like stocks that are
like short sale stocks, like your beam stocks?
Yeah. How do you feel about those?
Everything that has a beginning has an end. You know, I think that I think it's a good thing in the sense that it brought out like, you know, more retail investors and empowered them to say, you know, hey, we spotted something here. And honestly, it's like they spotted a huge opportunity, and, you know, kudos to them. They took advantage of it. I mean, that's one of the biggest things about being an investor within the publicly traded markets. You're always looking for something to essentially find and learn and exploit to your advantage as a gain. I think the thing is that it can end badly, and it has had a history of ending badly for a lot of folks, because of the fact that you're more so trading against, you know, short seller interests. But at the same token, you forget that there's also funds out there that have way more capital. You know,
Yeah.
it's like,
go ahead.
what do you say? What do you say to a company that can literally offload, say, for example, that like a BlackRock? You're not going to beat there's no way that you're going to beat a BlackRock. How can you beat BlackRock and they own everything? If you look at BlackRock's name, it's like whatever company that you go look at, BlackRock's name will be associated to that company where they have a holding within that company. And there's a few other companies that are just like that. So how can you beat that? It's not about like more so trying to beat them, but more so in the sense of trying to learn from them. And then ultimately, use the knowledge in which that you gain. So that way, essentially, it's not a competition against a major fund. Because again, their pockets are pretty much endless.
Yeah.
And then it's like you think that you're beating them, but yet you're not really beating them because you're going up against money in, like, for example, retirement funds, pension funds, and all that other stuff. You could be trading against your own 401k. So how does that work?
Yeah.
So I hope y'all heard what he just said, because if I had a DJ booth right here, I would have said I'd had the bomb go off, because he basically just told you, a company that pretty much has their hand that has their hand in everything. So you definitely should write that down, look that up, and it should probably help you when you're trading. You know what I'm saying? That's something I didn't even know. And I'm always looking up some stuff. So that's why I said it's always good to be with somebody that's like-minded. And you can't be the smartest person in the room. I mean, somebody that's been doing it way longer than me, and he's really I'm sitting here like a student myself, because, man, this is just some good information. I know Elise had a question.
No, it's a question. You can ask that question in the chat.
Somebody asked a deep question here. It says, Mark, what do you think about Feds delaying the QE tampering?
Tapering?
Yeah, tapering. Will we close 4,600 on S&P by the end of the year?
Yes. I think that we'll close 4,600 by the end of the year. My original target, for anybody that knows me, I think I had set my target for 4,500 for the S&P 500 with the bullish best case scenario at 4,600, and we're not that far from it. The tapering part is like, a lot of folks look at it in the sense of, well, it's a bad thing, and it really isn't. I mean, if anything, it's like the Fed did what they were supposed to do. And if you think about it, back in like 2013, 2014, it wasn't handled in the best of way. And I think that that's what's got markets spooked a little bit, because of the fact that we were coming out of a financial crisis, which was like the one market that's not supposed to fail is real estate.
Right.
I mean, if you had the most vanilla part of the entire markets, it would be real estate. And for that market to literally fall, and then of course people are like saying, hey, we're gonna literally leverage against the real estate market because of the fact that it is so stable. And when it became not so stable, then that's when everything fell apart. It's not the same when we think about COVID-19. We're literally just talking about businesses just getting back on track and getting back into the swing of things. So I think that honestly, it's when you look at what took place historically when the Fed had tapered, honestly, it's that was one of the key things towards the bull market run, significantly going on a run. So honestly, I think I think it's a good thing. I think that honestly, it's the tapering will probably start, if anything, in December, but more so my estimation is probably the tapering will start in January.
Yeah, January, February.
So I guess my next question would be, how did you feel about the inflation numbers? And how do you think that affects the market?
Inflation numbers, to me, they were expected. I mean, a lot of folks were thinking that, okay, hey, as a country, we were going to be fully into the swing of things by the time of the end of the year, where a lot of us were saying you won't see anything come back to any form of significant normalcy until really the end of 2022, if that, but more early mid to 2023. And I still believe that I still believe that it's more so end of 2022, not 2021. I think that everybody was just really, really optimistic for things to come back to normal in 2021. but I just didn't see that happening, especially when you have such a drop in businesses going under, unemployment, and then on top of that, companies now had to compete against the pretty much the United States government when it came to stimulus. Now those stimulus checks or those unemployment checks have now come to a close. That program has ended, but now they're looking at other programs to help support. And then on top of that, you have this massive exodus of millennials and Gen Z leaving specific jobs and leaving areas. So all those things have played major roles, and I think that they do. And then on top of that, let's not even forget about all the climate change issues in which that the American economy has faced, let alone let's also take into consideration of what's happening in the global economy. So when you put all those things together, you know, honestly, it's like the inflation numbers, it's not really a surprise. I think that honestly, like anything inflation, I believe that Powell is correct. Inflation is going to be temporary. And we're going to see those, you know, temporary spurts in inflation, especially across different arenas. It was never like, for example, a lot of folks looked at the inflation numbers early on and like, oh, well, the inflation number is really big. But if you really look at it, if you looked at the data, it was really coming from like used car sales because of the fact that there was a chip supply shortage, which completely interacted with their supply chain and logistics. And then it's like, now we're looking at, say, for example, things like food. Okay, well, look at how many workers are no longer working on agricultural farms. Look at how many like suppliers within food have either been decimated or have gone through significant financial hardships, or also that just couldn't get things fast enough to stores. So, you know, is it something in which that, again, that we believe is transitory? And here I am speaking like I'm the Fed. I believe that it is transitory. It's a transition. Can we get into a place where we could possibly even see some deflationary data? I think so. I think that also will be temporary, but essentially, you know, we'll forever find something which spooks the market, because the market always expects things to literally be very predictable. And when they're not predictable, then the market literally has to account for that. Meaning, say, for example, whoever is pushing the button literally has to account for that. And until they do, they go risk off, take money off of the table until they have an answer.
So somebody said, Mark, I have a question. What do you think about all this media promoting doomsday, a 60-70% drop in the stock market? That's a good question.
It sure as hell sells ads.
Yeah, it does.
Hey, every time you got a punchline, you got to sip some.
It sure as hell sells. I was gonna say something before, but I was just like, you know, I'll wait. It sure sells ads. You know, think about it. It's like, if I can get everybody to freak out about what's going on in the market, where are you going to go tune to? You're going to go tune to like CNBC, Bloomberg, and all these other places, as if they're going to have an answer to tell you when the correction is going to come to an end.
Right.
Like, they don't even know. And the funny thing is, a lot of the folks think that they're folks that are they're buying stock. No. Can we keep it? We're family, right? We can keep it a buck with one another. Okay. Let's get some obvious salient points out of the way. If I'm keeping it a buck with y'all, a lot of those folks, a lot of those pundits that you see on these shows, they're not long-term holders. If they are, it's like maybe you're on the wealth management point where you just bring in somebody's money and then just push a button and it automatically goes towards an algorithm that literally just like divvies out the capital and buys X amount of stuff. But if we're really being honest, a lot of those folks that sit on Halftime Show and many of those other things, they're traders. They're literally jumping into options contracts just like everybody else. And then maybe, just maybe, they may execute those contracts to like literally turn into shares with those profits. But for the most part, they're not buying up shares. Like they're not doing that. Anybody who believes that they are, you're fooling yourself. So really, they're in the same boat with the rest of you, where they're literally traders just like everybody else. How do we know? Well, I took a nibble of this. Seriously? A nibble. Now, if you're a fund and if you're dealing with like deployment of capital, you're going to deploy capital because of the fact that you see that there's a major buying opportunity. And in the grand scheme of things, you're not going to care when it comes to, say, for example, what's happening over the next 30 days because of the fact that 30 days after, the stock is going to be completely different. And this is going to be a whole new, we're going to be talking about something different versus what we talked about 30 days prior. So if we're really, really keeping it honest with each other, the one thing that they could be a holder in is maybe some S&P, some index funds to leverage against, say, for example, what they're trading, and maybe even going with some futures, some bonds out there to leverage against what they're also trading. But I mean, if we're being honest with each other, I mean, honestly, I mean, yeah.
So I read, no, I didn't read. It was an interview that you did. What's her name? Trade and Travel. I forgot her name. And I heard you mention it in there. That's right. That's her name. I heard you mention in there that you don't like to trade FDN. Why is that?
I do like to trade FDN. I mean,
you said you do or you don't?
I do like to trade FDN. I mean, because of the fact that it gives me, you know, Facebook, Google, Amazon. Well, it gives me 2 Googles, which that's weird. And then on top of that, it gives me a few other things that are within the internet space. A lot of great companies that I like. So it just moves a little bit different versus some of the other ETFs out there.
That's what you were saying. I kind of took it up. Kathy Wood is a prime example of buying up the stocks for the long term. Yes, she is.
Now that right there, that's a person who literally will go on live and tell you that they bought something, and then on top of that, they put their money where their mouth is because they make it publicly available for everybody else to see.
That she does. I mean, she's super smart. Oh, yeah, I like everything that she's doing. I like the way she's moved. She's
definitely into all of the technology.
Yes.
Can I ask a question for thought for the evening?
Yeah.
If Kathy Wood wasn't so open about like what is it that they're buying and selling for the day, where would ARK stock be at?
Yeah. She gotta sell it, man. You gotta sell it.
You're right. I never thought of it that way.
She gotta make everybody know what ARK is.
You're right. I haven't thought of it.
That takes a lot of gall to literally say, okay, hey, we're buying this, knowing that people are going to want to short against what is it that you're buying, just to either spite you or just say, all right, well, whatever. And then to still just hold on and hang on. And then imagine what it's like to be humble when you're right, even in spite of that.
Yeah.
It's like
she had that same poise, the same poise. And it doesn't matter when she's speaking, she could be 100% right. It's just calm. She's always so calm and humble.
She's one of the most humblest people that I know. Even after the show, like still like keeping in contact with her and her team. It's just amazing. It's just truly, truly amazing that they're just super dope people.
That's how I knew you was the man.
Hey, Mark, could you speak a little more on the rolling fours? If you can elaborate a little bit on that.
Thank you. I appreciate you for that, Moody.
Leave it to us doing the rolling four strategy on the eve of the anniversary of like really where everybody got started. Because really everybody got started on their long-term options contracts. Let me take a guess here. XOK 130 January 2023s. So you're pretty much coming up on your year anniversary and being in that contract around the same time that the market was pretty much going through correction at this point in time. So really to make it easier for everybody to put it into perspective, especially since I knew that people were going to be going back to work, but they were going to be deploying capital. And they wanted to still stay within the market and stay the course, even though that they had to return back to their jobs. That's where the rolling four strategy came into play, where it was pretty much you would deploy capital on a quarterly basis from the money that you had saved, and then essentially put that in towards long-term leap contracts that were essentially like the market gives you a gift around that time anyways. It doesn't have to specifically be on quad witching, but essentially around that time of the year, where it's like you can literally just set your clock and say, all right, I'm going to deploy, and then I'm going to have a set time where I come in and check in every now and then just for where we're at, how we're tracking. And then essentially over a period of time, the rolling fours was set that over a 4-year span. If you do it right and literally stick to the script as it pertains to what it is for you, then that really just gives you your walkaway plan, which is the first part of the walkaway. That was the other part. It was the first part of the walkaway. And I've kind of like left it there in a cliffhanger because I knew that that would take time for people to like literally mentally get there to understand it. And then also to start going through the process and sticking to that script and doing it. And then that's when, if you guys notice, I think last night I dropped the ultimate cheat code for everybody, which was like, this is how the game is played and this is how the game is won. Like, you know that you won when you're now in this game, where it's like, you've played the rolling fours. Now you still keep some of those leaps going, but you take some of that money and put it towards a monthly dividend where you're able to pay yourself. And then on top of that, hold stock. So now you get a quarterly dividend and a monthly dividend, and then also have the money keep doing its thing on a leap option contract. Now you have 3 different vehicles in which that are now working for you, and you're ultimately still getting paid in the process. And then on top of that, you can do it underneath an LLC business, in which that ultimately the business is just like literally just cranking. So like,
Mark, I gotta stop you. Y'all ain't hear that. Y'all not hearing that.
I was gonna ask you if you can just break it down one more time.
I can break it down. I mean, yeah.
Oh my goodness.
And how would you tell a new investor to begin and start the rolling 4?
So essentially, it's like to start the rolling 4s, it's just pretty much just start saving money. Just start saving money and just applying it towards, your brokerage account. You don't, just because you have the money in your brokerage account doesn't mean it has to be immediately deployed. You can actually have start dates of where it's like, okay, hey, these are going to be the dates that I actually deploy. And so then it's like on a quarterly basis, you can literally just say, okay, hey, quarterly, I'll start looking around the time of quad witching or around that arena, even after quad witching, this is where I'm going to deploy. Then after that, it's like, all right, well, now it's like I have 4 positions that are playing through the year or through a 4-quarter basis. So now I have like 4 positions, and then the next year, those 4 positions will turn into 8 positions, and then those will turn into 12, and then you'll get to 16. So then you'll have 16 vehicle investments that are going across the way, with each of them playing out for the long term, and then they're all staggered. So essentially you're staggering the plays and then essentially just getting out on a systematic basis. And then from there, it's like, all right, I take the profit. I can leave the principal once when I got into a certain point. So play that for 2 years if you wanted to, and then essentially take the profit and then put that towards take the profit towards MLPDX. That pays you monthly money.
Hey, look,
that's like a monthly paycheck. That's a monthly paycheck that they pay you just like clockwork, and you're not losing your principal. You're just taking the money on a monthly basis while you're playing still your rolling 4s. And then on top of that, it's like when you get to that point, it's like you can keep adding to the monthly dividend. And then if you want to, when you get to another point, you can, after you've done it for maybe another 2 years, you can put that towards stock. Now you have a safe hold. So if you think about how much money that you just produced there, I mean, just think about it, what it looks like if you have, what is that? I'm not the best of persons with math, but if you have, say, for example, 16 different positions and each of them are at 5,000, that's $80,000 so that's $80,000 out of 16 positions. Those positions, essentially every 5,000 nets you at, say, for example, keep it simple, at, say, for example, a 2x return. So each position places you at 10 G's.
So my question.
So then times 16, 160. Again, that's the first year. Double that again, that's 320. Take the 80 out. Take the 80 out. Then that leaves you with, what is that? 160.
Man, listen. I just got to say this right here. You are right, Darb Jacks. This is not financial advice. Don't go jumping in and blowing up your account.
Oh no, I mean, don't blow up your account. I mean, like, essentially, like, that's the beautiful thing about it. Like, you have tons of financial advisors to go back and fact check you and ultimately make sure that essentially that you're doing it correctly. I mean, there's multiple different ways in order to get to the finish line. It's like this is just the way in which that, honestly, I'm telling you, a way because of the fact that
you're gonna get quad witching late this time again. Go ahead, Elise. I'm sorry. Go ahead, Elise.
No. I was just gonna say this right here. We got a couple of questions in the chat. I just wanted to get cleared up because quad witching is next week.
Yeah, it is.
So somebody
quad witching is pretty much the time when the S&P 500 also pays its dividend. Go figure.
Oh wow.
You know what? I ain't paying attention to that. Somebody said, do you also focus on selling puts and cover calls? I mean, you can answer that.
No. But it's like I don't scoff at anybody that does. Like I said, whatever investment vehicle works for you, it works for you. But that's really not my thing at all.
Okay.
The reason why I don't do, say, for example, covered is because of the fact that I know that I'm capped at, like, say, for example, if I'm doing like spreads and stuff like that, I think I'm capped at 100%, and I don't like anybody to cap me on what is it that, what my potential return is.
Gotcha. That makes sense. Someone asked, what is the minimum amount of capital to start the rolling 4s?
I mean, that's up to that's up to you. I mean, honestly, I would say like if you're being realistic with yourself, I mean, everybody knows that long-term contracts do cost.
Yeah.
Long-term contracts do cost. And this is the reason why I tell people to start off with ETFs, because they're cheaper. And on top of that, they give you a method in which that ultimately it's like you can really just like it gives you a buy-in versus going into a singular stock, which is way more expensive. So you have that. I would look at, say, for example, very base case. I mean, probably $2,500 per investment.
Okay.
And then my question would be, when you're doing the rolling fours, right? Are you looking for a certain percentage, or like, say, for example, you know how sometimes you get a stock that runs up pretty nicely and then it goes into that correction move? Are you actively like, say, okay, here comes the correction, let me take the money out, let it drop, and then put the money back in? Or are you just taking all the bumps and bruises along the way?
So I'm typically taking all the bumps and bruises along the way. I mean, that's kind of like the process. Like a lot of folks, like, you know, if you were in, like, for example, the AMD, you know, calls, you took bumps and bruises along the way. And then AMD did what it did.
Yeah.
And then people went from down, say, for example, you know, 40, 80% to then next, you know, people were cashing out at 200% or 100%. So it's like, I mean, at the end of the day, it's like you still got to go ahead and live your life and do what it is that you do. And then let the portfolio do what it's supposed to do. Now, I think the biggest thing that it possibly taught some folks also is like, you know, don't be a little bit too overzealous, because all great things come to it, like have to sometime come to an end. And it's going to take a little bit longer now that the market is starting to get back into its settled mode. But yeah, I mean, when I'm normally picking a price, it's like I'm looking to step into something that 9 times out of 10, when I step into something, it's been beaten up now. You know, I look for something, I look for a good company or a good stock or a good ETF that is ultimately just taking a few lumps or is taking a little bit of a beating. And it lets me know that, you know, this is a good price. It's a good price to buy in at, you know, and honestly, I'd be a fool not to essentially come in here.
Yeah.
I'm not going to lie, man. I did the rolling forward, and I think I lasted, what, maybe a month?
He took his profit early. I was like, no, what are you doing?
Yo, real talk, I ain't got nothing wrong with that, because here's the thing. Let's say that you play a rolling fours and it's like, all right, well, you get your benchmark was, say, for example, 200 or 300%, and then you make 200, 300% with so much time left on the clock. If that was your target, then you hit your target. Like, I'm out.
I definitely hit my target, and I wasn't expecting to hit it that fast. It was
market.
MJ. It was MJ and MSOS, and the contracts were cheap, and I walked away with like 300%. But if I would have held it for like another, I think it was another month, I think it ended up running up a little bit.
That was the time that all the marijuana stocks just went crazy.
Yeah.
And
but at the end of the day, it's like you can't lose money by taking profit.
Yeah, you're right about that. So I was like, oh man, I took it too early, but man, it takes discipline doing that. But I definitely do dig the strategy.
Let me ask you this: if you find yourself back in that situation and you see that you hit your target, are you still going to do the same thing that you did and cash out?
Yeah,
because smart money would do that. Smart money would cash out and say, hey, I've hit my target, I'm good. I don't need to be greedy. You know, bulls make money, you know, bears make money, pigs get slaughtered.
Yeah, facts.
Yeah.
So always take your profit.
Yep. I got a question, Mark. So being that quad witching is coming around, I know you're probably already in a lot of positions already. Are you looking at certain plays right now to enter for quad witching? Something that's on your radar that's kind of been beat up that you're kind of like looking to get in?
I'm gonna take the CNBC answer. I've been nibbling.
Yeah, come on,
yeah, so I have been buying into stuff. It's like, it's interesting because some of the same things that I'm sharing with y'all, it's like those I'm giving you, like, you know, over like when, especially in this season, I've gotten more so like into like, you know, into getting more technical with everybody and showing you how is it that I see the chart and how is it that I spot opportunities. So like when I showed everybody Amazon before Amazon went on a run, when I showed everybody Visa, you know, there you have it. And it's like looking for those cues where it's like, all right, well, here's a stock that's definitely in correction. Does it belong here in correction? Probably. Is it going to stay here in correction? Probably not. Do you believe that the thesis is broken? Probably not. So essentially, is there more upside up in its future? Probably yes. Should I be, looking to buy in at this? Probably yes. Is now the time? Question. What does the chart say?
Gotcha.
Like I always tell people, make sure that you don't stop. I always tell early traders this and beginning traders, because beginning traders, they always fall into this pitfall. You can't make the market bend to your will. So the only thing that you can do is take what the market is willing to give you. If you try to make the market bend to what your will is, even if your thesis is solid, but yet the sentiment just isn't there, you're going to lose. Yeah. So if you take what the market is willing to give you, then it's like, okay, you're good. And if it means that a position that you want to get into right now is just not available, that's okay. That's the beautiful thing of what we call time.
Yeah, for sure. So I know we've been talking about stocks, but I do have to ask you a crypto question because here at Unbroken Mind.
Mo, before we get to the crypto, I do want to ask. I hear you talk about the EMAs a lot. Yep. What are your favorite indicators? And also, have you heard of the SHRAG?
I have heard of that. It's not my favorite, but I have heard of it. My favorite indicators are pretty much I'm as vanilla as it comes because exponential moving average, because it takes into consideration the simple moving average, but also applies some little extra math on it, which gives you a little bit more. I think it gets a little bit closer. I'm a huge fan of Fibonacci channels. Of course, I love stochastic channels and stochastic RSI. I can also go with basic RSI, Bollinger Bands. That's always a basic one for all traders out there to see exactly where the volatility is in a stock, or if it's there, and also if we've gotten a little bit too overzealous. Back in the good old days, it's like, you also have these thing called pivot points, in which that it tells you, like, pretty much on a chart, really, are we bullish or are we in a bearish signal right now? And you can kind of bring that down to a shorter form. Let's see. I love buy sell volume. I love that. Because it lets me know, like, is the selling volume really starting to subside? And are we starting to pick up in buying volume? And at what rate? So, I mean, those are just some of the simple indicators. Like I said, I'm a very simplistic kind of guy. I know a lot of folks like to do other things and, have fancy charts and a lot of stuff on it, as if they're reading and walking through a matrix.
Yeah.
Matrix.
Clutter screen.
But I mean, I'll just be honest. It's like it just, Occam's razor. The simplest answer is typically always the right one.
Okay. So you.
Oh yeah. So I know you love these stocks.
Of course.
Are you investing in crypto?
Yes. So currently, right now, I probably hold about I like to say between 25 to 50,000 Ethereum.
Single coins?
So what? Single coins?
Yeah, like Ethereum.
Yeah.
I was mining Ethereum.
Oh, yes, right. You said you was mining in 2019.
Yeah. That's what's up.
No, I stopped in 2019, but I was mining before then.
That's what's up.
My goodness.
So I guess
hold on.
You got 20,000, 50,000.
That gotta sit in your head. 2019.
Yeah, like how can you just move on?
Ethereum.
How can you just
if
move
he was
on?
already mining it,
like, how did you just skate past all that?
He is sitting very lovely right now.
But listen,
yes.
did you hear when he said he was holding?
Yeah, that's straight.
I cannot just move on from that and be like, oh yeah, that's cool. Next question. I can't. That's like, I'm thinking in my mind.
I got a few of them, but I ain't got that many.
Yeah.
So how do you feel? How do you feel the I guess you would say some of the transfer of wealth into the crypto market? How do you feel about that?
I'm all for it. I mean, I'm all for it in the sense that it just shows that there's diversification that can be had within the market, and it's letting you know that the market itself is, it shows you that even the market itself can change. It doesn't mean that everybody's going to make their wealth within the stock market. It means that some folks are going to make their wealth in, cryptocurrency, altcoins. Some folks are going to make their money in, say, for example, having a startup and, selling their startup or taking their startup public. I mean, there's multiple different ways. Some folks will make their money in real estate. I mean, those are all part of different markets, but they all, like I said, they all lead towards one path, which is ultimately creating wealth for yourself. I think the biggest thing is that, you know, what makes you more disciplined is the fact that you're willing to, you know, stay the course on something. And that's where it's like, it separates those that are rich versus those that are wealthy. You know, wealthy people, you know, understand time and they're willing to, you know, take the time and see it all the way through. Those in whom which that are rich, you know, like for example, people who win the lottery are rich.
Yeah.
But let me ask you this: how many folks that are rich stay rich?
Not a lot.
Not a lot.
Maybe like a small percentage, like one or maybe two.
Yeah, you have more folks that were once upon a time rich. You have more folks that were once upon a time rich became bankrupt versus those in whom which that are wealthy that have remained wealthy. Even when they file bankruptcy, they're still wealthy. But let that sink in.
Yeah.
Yeah. Definitely, that's definitely a nice way to consolidate.
In there. What do you think about Solana?
Are you familiar with
I mean, I'm still gonna say the same thing. I'm like, yo, it's like, well, I will say this. You have to look at it in the sense of long-term use case. Like there's a lot of theories out there as it pertains to what, you know, what coin or what, you know, altcoin is going to be able to do. My thing is, the reason why I got so heavy into like things like Ethereum, as well as, you know, things like, you know, other cryptocurrency, and the reason why I never really got into Doge or, you know, some of the other things is because of the fact that where's their use case?
Yep.
You know, Ethereum is proven because of the fact that very many systems use its blockchain technology, which was one of the major parts of its thesis from day one. By the way, a lot of folks don't know this, but the founder of Ethereum also came from Peter Thiel's fund, in which he said, hey, I'll invest $500,000 into you if you defer going to college. So he deferred going to college to create Ethereum.
I wouldn't mind, you know.
Yeah, I would have
skipped over college too.
I mean, you know, I'm just saying, like, you know, if you think about it, it's like, again, you have to think about it like the one part where he's like saying, like, and that I think that's where the next phase for Ethereum is making sure that you start getting people unbanked.
I got a question, Mark. So for someone starting up a cryptocurrency, it's all about the use case, right? So
correct.
What's the use case that you see as of now that cryptocurrency isn't doing or partaking in?
Using actual cryptocurrency for massive transactions until recently. I think I actually spoke about it. I think I spoke about it last week, and I said, don't be surprised when you see Starbucks literally start accepting Bitcoin. And then sure enough, when El Salvador opened up those doors.
This is so crazy.
Like,
we having these same conversations. This is, this is
the hidden secret.
I agree 100%, but I'm not giving Starbucks Bitcoin.
Or McDonald's.
I mean, shout out to the guy who like paid like 32 Bitcoin just to pay for a pizza.
Yeah.
I wonder how he feels.
Oh my God.
Yeah,
who bought a Tesla with a Bitcoin? Like,
yeah.
I mean, again, it comes into a play of like, all right, are we looking at it from an asset class standpoint, or are we looking at it from, say, for example, again, something that can actually be used as a currency and actually used for transaction? Pretty soon, we're going to have to get there. Mm-hmm. If we don't get there, then that creates an even further problem because of the fact that, all right, well, yeah, we'll just let this thing keep running up. So we don't know what the price would be unless there was already a set price of where the cryptocurrency itself, like Bitcoin, would be at. But then at that point, then what? Like, all right, sooner or later, it's going to be like kind of like, and that's why people keep saying the tulip mania. That's why they keep applying that same type of theory to it, because if you don't show that essentially that you can go to the next level or the next, pretty much the next chain in evolution, then ultimately, like tulip mania, sooner or later, somebody's going to be like, all right, it's time for me to sell. And I'm going to start selling at it, like start adding, this type of deal to it and this type of deal to it, and then sooner or later it starts to lose its value.
I think what happens is once the world banks finally agree upon what, get into the digital currency, I think that's when it really takes off. But they
already have.
Yeah,
they already have. The only problem is that they just can't see eye to eye, and that's the reason why they want to create their own coins.
Right. That's right. Because if you look at
I mean, think about it. If we're going to keep it 100 with each other, I'll keep it funky with you. If we're going to say that thesis stands, then why is it that China is not using Bitcoin? Why is the United States not using Bitcoin as a general cursor for cryptocurrency? Why did the United States create U.S. dollar coin? Why did China create its own currency? And I'm probably sure that everybody else is following suit.
Yeah.
And it's just like, well,
I think that Bitcoin is going to be that one median that everybody's money transfers to. So if I'm trying to pay $100,000 for so many goods and I'm trying to give it to America, I think that they say, hey, I'm gonna take these ones, put it in Bitcoin, and then America can take whatever it is from Bitcoin and transfer it to their money. That's how
I would just, if it was me, I would literally use each country and say, what is it that you're known for? What are the utilities or the materials that you're known for? And then I would literally apply a value to those materials and then apply it to the currency itself.
Yeah, that's a good way to back it, to make it worth something.
Because now you actually have a backing with some type of insurance versus essentially, pretty much what an algorithm, can ultimately tell you, and also based upon the amount of buyers and sellers. But I mean,
Mark, would you ever create your own cryptocurrency, or would you like to be a part of one?
No, I'm not going to do that. But I could create my own ETF.
Look at that. He just threw a little hint out there, y'all. So be ready for the Mark Monroe ETF out there.
I'm gonna be a Mark Monroe ETF. I mean, I'm kind of like thinking about what do you guys think about this ticker, TCUS?
You know what? Somebody just put it in the chat. I saw it. I haven't done too much research on it, and somebody just put it in the chat and was talking about it as well.
Yeah, I haven't heard of it.
So I'm gonna take notes on that because you're not
it's like if you try to go look up the ticker today, it doesn't exist. But I'm just saying, what do you guys think about such a ticker?
I think it sounds very catchy to the subconscious mind. TSUS.
No.
TCUS.
If we look it up and it doesn't exist anymore, then yeah, I'm trying to figure out what's going on.
Well, just think about it. Letters TCUS as
the come up series.
The come up series. Oh my God, yeah.
Okay, so look. As soon as you drop it, I'm buying it too.
I'm buying straight into it.
People are gonna like, yo, when do the options become available?
I'm definitely gonna support the move. I'm be like, man, cuz got something. You're gonna be able to
look up bar charts and you're gonna see Unbroken Mindset with so many holdings in it.
Yeah.
That's what it's gonna be.
That's a fact. We jumping straight into the shares first until you open up the option chain.
Yeah, for sure.
That's fair. That's fair. But we would have to wait like 60 days or something like that.
Yeah, listen.
Okay, we'll wait.
I really want to say, I appreciate you from the technical difficulties that we had at the beginning. You stuck with us. You didn't. You know how it is. It was we was on color people time today.
Okay. I mean, just as a heads up, why do you think that the pick list ultimately is there?
What?
Say that again.
Say it again.
Why do you think that the pick list exists?
The pick list?
The come up series pick list?
Oh, the pick list.
Oh, okay.
Picks.
Just imagine if those were in an ETF.
So you already telling us what's gonna be an ETF.
We're just having tryouts.
Yeah, got you for sure, man.
Look, I'm already. I got a notebook.
Hey, Mark, look, I'm not gonna lie. I've been doing research on you, and I'm just being frank with you. I think we're like blood cousins. I'm not gonna lie. I don't know if you've ever been to Dominican Republic, but I'm pretty sure that we're related somehow.
I mean, it's possible.
It's definitely possible, man.
Just let me know if you need like a drop of blood or something like that. Just as long as we don't do any tests through Theranos, we're good.
man. I truly appreciate you. I mean, I really do. This interview. I can't wait till we get it uploaded because a lot of people already asking in the DM that we record it because they're trying to get the other gems about the Quad Wood channel, about the Rolling Forward. They're trying to get all that information. I think they missed your live yesterday when you dropped all.
I'll be live tomorrow, and honestly, it's like I said, it's like that one's going to be one for the record books.
Hey, plug your site for the people who don't know what it's called. You know what I'm saying? I know it's called the Come Up series, but tell them where to find.
There it is. I mean, y'all know who we are. I mean, wait, yo, y'all know who I am. Series. You know who I am. I'm just kidding.
Mark, I think it's I am Mark Monroe on Instagram. You can find him on YouTube, the Come Up series, and let's go.
You can also find me on Twitter too. Just be advised on not financial advice for my tweets or my postings on Instagram.
Yeah.
But yeah, you can find us. I mean, honestly, it's like, we do it for the love of each and every single one of you. I mean, honestly, that's the reason why. It's like, for me, it's like, life has been very much so bountiful and wonderful for me. So it's like, who am I to hold that awesome wonder just to myself? It's definitely my duty. To whom much is given, much is required, to pass it on. So, this is a movement. Yeah, this is a movement, y'all, and we're now in season 3 of this movement.
All right, so they told him because they was trying to ask about where you go live at, and on Tuesday and Thursday he does go live. Everyone on his YouTube channel.
And yes. I do, and I'm gonna let y'all know I'm on there. Yes, I like to see what he's talking about because he's been in the game longer than me, and I'm still I say that I'm still fairly new compared to him having 18 years or whatever, right? So it's always good to get that more a person that's more knowledgeable about a subject that you're still learning. I mean, I've been doing it for 5 years, but like I said, compared to 18, that's right. So it's always something that he throws out there that maybe I missed or something that I could look into, like this Black Rock thing. I'm like, man, I'm gonna look that stuff like right now. You know what I'm saying? So he go out.
But not to cut you off, Mo, and I know the thing is, I just have to say it. I look at you, Mo, just like Mark Monroe. You changed my life, and I have to let the world know that. I started Unbroken Mindset back in January, and Mo became my mentor back in January, and I would say around April, he became my big brother. And I just also want you to give some people some input on Unbroken Mindset as well, because the things that you do, Mo, and we didn't speak about Unbroken Mindset, is very unique. You know what I'm saying? You really care about your community. Like, you can see it in our Discord. Even my cousin said it. Like, we can see how much you're for the people. You guys are on this interview, but you're still trying to get everything to work just so we can get this information. And I take my hat off to Mark. I take my hat off to you as well. But if you could just tell us a little bit more about your background, Mo, as well as we have you here, because you've been such an inspiration in my life, and not only in my life, is now trickling down into my family. And you're bringing them in as well, and people don't know, but you bring them inside of your home. And that's something that I think some people take for granted, because not everybody does that and is willing to give out the information like they do. And you changed my life, and I'm always gonna remind you, because you're very humble, man.
Man, I appreciate it, man. I'm really just a self-starter, man. Like, I was an entrepreneur, I was business analyst for a number of years. I went to Florida State University, but I also am an HBCU graduate too, Concordia College, right up the street from Tuskegee. But man, really, all I did was I looked for guys like Mark Monroe, just people who were putting it out there to help the people, help the culture really just move forward. And I said, you know what, if I ever get to that level to where I'm capable of teaching somebody effectively, I would want to do the same thing. And if you ever been a part of Mark Monroe's web series or just listen to him talk, like, he really wants to help people. And I said, I want to do the same thing. So that's why we started Unbroken Mindset, because it's all about perseverance, and to get something that you never had, you got to do something that you never done, and you got to keep fighting. You know what I'm saying? Because I tell anybody, I've had a number of losses, but since I had the mind state of unbroken mindset, I refused to quit. So when I was losing, I just go study harder, and then eventually it started really just going my way. And I said, you know what? When I start this group, I'm gonna just start showing people, all of the people that I follow along the way, to give them that same inspiration that I was given when I watched them.
That's amazing. I mean, honestly, it's like, we're gonna have to schedule some time for you to come onto the show now, since you brought me onto your stage.
Oh man,
you're gonna have to come to just not that far away. We're maybe just 2 blocks away.
Yeah, I don't mind coming to holler at cuz, you know what I'm saying? So me and Elise, we've done this thing together, and she's really put in the time and effort to really help me and help the group move forward. And she always wanted to have a conversation with you whenever, like, she was like, man, whenever we get right, we're gonna make sure we get a conversation with Mark. And I was like, hey, here it is.
Well, I mean, I'm not that hard to I'm not that hard to find. Like,
right.
I hope I'm not. Like, it's
you responded very responsive. I mean, we've been keeping in touch. We had to reschedule due to some family death in the family. I appreciate you for doing that. And yeah, we're here. I appreciate that. And like I said, it's been a journey, but it's been worth it.
It's definitely worth it.
It's been worth it.
Like Kobe Bryant said, the dream is never the destination, it's always the journey. So you guys are living out the dream right now, like we all are. So it's like, I just wanted folks to know, like, I'm just one guy, just because I've been in this game for 18 years doesn't make me any better than any of the folks on the stage. I consider myself just as equal to them. And pretty soon it's like, you're gonna have to go with their voices, because pretty soon, it's gonna sunset on my time. And ultimately you're going to have these individuals. So that's the amazing thing about it. So I'm not going to be like gone, but
but yeah,
my time as an active trader comes to an end. And I think it's 2020, at the end of 2023, I'm done.
For sure, man.
So actually, no, at the end of 2024, I'm done. 2024, it's over.
Got his number in his head.
I go out with the 20. I go out with the 20 years. I'm done.
Yeah, I'm the same way. I got a number in my head, and once I hit it, I'm good.
It's always good to have that. Like, because it's not a bad thing. It's more so in the sense that you set goals for yourself. And then on top of that, it's like, there's so much more that the culture needs me to do. Like, for example, there's schools that need to be open. There's so much more in which that we can do that, only I can do right now. And what is it that I'm doing in this capacity? But again, that's gonna, that's why I said, it's like, we need more leaders like the 4 of you, for the culture to know. I mean, there's so many other folks who don't look like us, that I think it's now time, especially if they love everything about our culture and what is it that we provide, and also the trends in which that we set. Well, now it's time that we give them another one.
For sure. I like that. And that was just my mind frame the whole time. Like, they need to see, and that's why I like when you guys say, hey, HBCU grad. Because, some of these kids, they overlook the HBCU. And
look at us now, we're getting draft picks.
So I've had the experience from both of them,
Yes.
And I enjoyed my HBCU days just as much as I did when I was at Florida State. So for sure. Yeah, for sure.
Mm-hmm.
And that's the amazing thing about it. Like, so, I mean, don't be a stranger. Anytime that you need me, just flash the bat signal in the sky.
Oh yeah, for sure. And I appreciate you.
All right, everybody.
I appreciate you as well, Mark. For I was kind of nervous to reach out to you before this interview, and I appreciate you replying back. I had a beautiful dream, and then also just looking at my Instagram and seeing that Mark Monroe replied back to me, with a heart and everything. It meant a lot to me. You know what I'm saying? And Also, I didn't mention your name, Elise, but you know that you're an
Oh,
inspiration to me, and
nah,
I
you
just want to
good.
thank you. No, I know you're very humble as well, but
Oh, he gonna give you
thank
your
you for showing
flowers.
me.
Yeah. Get these flowers now. Take them.
Yeah, we definitely about to get these because you never want these flowers, Elise, and you're very humble. You're truly humble, and the things that you do in Unbroken Mindset as well is life changing. You know, I talk to my cousins about you, my family members, and you're really turning a generation around. You know, and then even the things that you've done in the military. You know, you've been here for this country, and now you're here for your family, and you're here for your Unbroken Mindset family, and you truly have showed me your character, your soul, and your spirit, and you guys are truly amazing, and I cannot not stop thanking you guys because this euphoric feeling that you allow me to have, and I know that I know that I'm doing my own due diligence, but you have to understand that the energy that you guys are putting out is so amazing, and I just really appreciate I appreciate all of you guys, and I also got to shout out my boy Frank. He the best
Hey,
NFT maker in the world.
yo,
If
he
you
was like
get
the
NFT,
silent assassin to the whole show, but I'm here
Listen,
for it.
he
listen,
thinking
Frank,
about how to create this as an
listen, I'm gonna
NFT.
tell
That's what
you,
he's
Frank,
doing.
what Frank is doing right now, he probably got 5, 6, 7, 8, 9, 10 pages of stuff that he done wrote down. And he got to go back and research and go back and look it up.
That's
Yes.
what I'm talking
He's
about.
gonna come back and be like, all right, so Mark Monroe said this,
Yeah,
right?
and we gonna revisit this whole conversation tomorrow.
That's
I'm like,
every
hold on,
day.
Fred, let me get my drink first. Hold on.
Oh yeah.
Make sure y'all go follow my boy Frank on Real.
Yeah.
Hey,
There you go. Hey, I appreciate you coming, letting us interview you. Hey, you dropped some gems. Like I said, I'm research a lot of things that you drop. I'm fairly new to the trade option game, so I'm always learning something from Mo, learning something from Elise, Moody. I take notes and just try to figure out my own lane in this space. Trying to figure out what type of trader I want to be. I'm not in a hurry to do anything, so I'm a crypto guy. So but it's a lot of money in trade
ain't
options.
nothing wrong with that. Nothing wrong with that at all.
Absolutely. And if y'all thank me, but let me plug myself in there as well. If anybody wants to learn the charts, please come visit Unbroken Mindset. I do chart classes and I do them very affordable. And the reason I do them very affordable is because Mo changed my life, and I want to be able to change other people's lives. But he always taught me to value myself. He always taught me, it's not about the game being sold and not told, but it's more so about valuing your time and your family's time. So, I got chart classes from beginner's class from $100, an intermediate class for $150, and an advanced chart class for $200. And I don't plan on raising the price no time soon because I want to be someone like Mark Monroe, someone like Mo and Elise and Frank that are helping changing lives. And I want to make it affordable for you guys to be able to learn this skill set because, hey, I learned to charge for Mo and it changed my life. Now I don't talk about myself too much, but I appreciate this opportunity.
Hey, you up, gonna flex a little bit. But man, I just want to thank you, Mark Monroe, man. This was a great interview, and I'm happy that we finally got a chance to talk to you. Man, I was taking notes the whole time. So I'm ready for you, Frank, when you call me, because I got some questions for you too. And man, I'm definitely gonna keep in touch with you, man. Just and I'm gonna keep in touch with you, and I'm gonna just make sure that we always follow up with you. And hey, maybe when we do one of those rolling forwards successfully, man, I'm gonna show you our results.
Oh, I look forward to it, and I can't wait for all this, like whatever we call this pandemic. I can't wait for this to be over because I got a lot of y'all to meet. So I'm gonna be like Bernie Mac, yo. When you handshake with black folks, you got to stay in shape.
Yeah, for sure, man. I definitely would like to pull up on you. You know what I'm saying? So once we get all this stuff clear, man, we definitely can set that up.
I'm here for it. Well, thank y'all for having me.
All right, thank you guys. All right, guys, we'll be out and appreciate you again, Mark.
Thank you.